Hey, good afternoon, everybody. My name is Scott Rutter. I'm the founder and president of the New Jersey Cannabis Business Association. Thank you for joining us today on this really important lunch and learn discussion. We have Ken Rose of Rose Law joining us today. But before we get into Ken, I want to thank our sponsors. I want to thank especially Sprague Energy. They are our preferred energy provider. Financial Resources Federal Credit Union, Cureleaf, Burton Trent Public Affairs, HPK, CPAs, Township Green, Sachs LLP, Dutchie, Puffin, Canna Remedies, DM Labs, and Fisher & Phillips LLP. That list of sponsors continues to grow, and we want to thank all of our sponsors without whom we could not be having these discussions on Lunch and Learn. And it's really exciting today to have Ken Rose with us. He's going to tell us how to shake the money tree, right?
Yes.
Ken is an attorney. He spent decades working with banks. He's deployed more than $25 million in loans and equity. He's closed deals in multiple states for cannabis operators. And he knows more about cannabis investment than just about anybody else in the country. Now is a really important time for this conversation, Ken. We were just having this discussion a little earlier about the challenges and the trials and tribulations of getting businesses off the ground through investment opportunities. So Ken, I'm going to just segue over to you and let's kick off this discussion. I'm really eager to have it.
Well, thanks, Scott. Thanks for having me on this Lunch and Learn. Education is vital to us in this brand new industry of ours. It doesn't seem brand new for many of the operators that are toiling hard, but it is brand new. It's a heavily regulated market, as we both know, and that brings the joys and tribulations with it. Because although we are heavily state regulated, we are all waiting with bated breath to hear what the federal government is going to do in so many different ways. And the federal illegality, as much as we try to hide it and put it under the table, has unfortunately reached its ugly head out, especially as it relates to raising money and raising money at debt levels that are not impossible to sustain. So what I wanted to share with each and every one of our listeners today is that there is hope. There is opportunity out there. Demand has never been greater. Maybe that there's a correlation between the difficulty in the economic marketplace and the amount of weed that people are consuming. But the disconnect is very, very real. While we are having one of the greatest growing demand industries increasing over the sales of last year, which I think nationally, most estimates have the national estimate at $23 billion for 2022 as a gross volume, between 20 and 25 billion. What I'm hearing for 2023 is that this will be a $30 billion industry in the United States. So you would think in a $30 billion industry, we would be able to shake the money tree. So that's what we're here to discuss. Now, I know you had in June a very timely Lunch and Learn with crowdfunding. And I was going to talk a little bit about that because mainly what we're going to talk about is what's happening in the marketplace today, which is debt. But you can do crowdfunding. You did have a notable gentleman on in June that talked about it. The problem with crowdfunding, which is well known, is that you don't know the people that are involved in the crowdfunding. So even though you are appealing to a more common denominator investor class, because you don't have the accredited rules for equity crowdfunding per se, so you do democratize the ability to raise money. Unfortunately, you're not really going into your operation with people that you know, or people that you have done business with, or people that you're comfortable necessarily with, because these are blind investors. So what we're trying to do in our Lunch and Learn today is discuss what works, what's working now, and how exactly do we shake the money tree. Well, first and foremost, Scott, you and I have discussed this many times. at cannabis associations, the first and foremost is staying the course, staying positive, remaining upbeat, realizing that money sources are very difficult to come by right now, and that you have to be extremely creative, extremely opportunistic, and willing to ask literally almost anybody if they're willing to assist, contribute, provide dollars, and provide some support in this industry.
Hey,
Um,
Ken, let me just interrupt there. Can we talk about the differences, right? So the challenge I think a lot of people have right now is this expectation that, once I apply and I either get a conditional or annual license, that the money would just fall out of the trees and we would be able to find investors. And I think that was rather quickly. And I think that was the thought that we had, say, just a couple of years ago. Right. And what's happened in the market. So it's not just cannabis related, right? I mean, what's going on in the marketplace, what's going on with investments, what's going on with inflation. Why is today's dynamics much more challenging than just a couple of years ago?
Great question. And excellent question. In the last 9 months to really about 15 months now, we have seen higher costs of capital. We have seen the outrageous projections of these startup companies been reined in, and these optimistic valuations been reined in by the actual expectations of the reality of the operation. So what we're seeing is a confluence of events all happening at the same time. The higher cost of capital, the expectations that many new entrepreneurs had with the valuations. And because of that, we've seen a lot of the venture capitalists not looking to go into the cannabis space. We've had this long delay from the federal government in allowing us to do some debt transactions, debt credit card transactions. We've had a lot of disappointments from the state in getting our licenses approved on time. So a lot of the projections that companies were providing to their venture capitalists and their angel investors, unfortunately, have not come into play because of the environment that we're in. A lot of the new companies are finding that the difficulty in the macro environment has increased the difficulty in this marijuana environment, in our cannabis environment. So as difficult as it is to get a loan for a bakery, as you and I discussed, as difficult as it is to get a loan for a restaurant, think about how much more difficult it is to get a loan for a cannabis company, which is federally illegal.
Right. And that's what I talk about a lot of times when I'm talking to folks at the members of the NJCBA, people I meet. If you are, think of the challenges, to your point, of opening up a bakery. Think of the challenge if you want to be a dispensary operator, what it would take to open up a liquor store. And if you don't have the ability to open up a liquor store, to raise the money, to put together the team, to have enough inventory in place and all these other factors for a liquor store, it's going to be that much harder for dispensaries. And the same thing, you mentioned bakeries or manufacturers. If I want to be a cultivator, how challenging would it be for me to open up a tomato farm? Things like that. I think we have to set the expectations for those who want to enter this industry, the realities of today versus yesterday, and then how to properly position yourself. So when you are presenting to investors, whether they're friends and family, professional organizations, or otherwise, you have to position yourself. And I think what you said a little earlier is how you are valuing your company. What are your projections for your revenue? And if they're not set, if they're not based in reality, an investor is going to pass you by. If you have a $5 million company that's purporting to look like a $10 million company, an investor is going to see right through that. Would you agree?
Yes. What we had in the earlier days, a year and a half ago, I consider an earlier day.
Yeah. And in the world of cannabis, it's light years ago.
18 months in cannabis is light years. Yes. Yeah. We were able to get financing originally on companies that had very little profit or very little revenue based on projections. We were seeing some investors step up to the plate with a good, sound business plan, without very little revenue, without very little specific operational results. What we're finding in the marketplace today, unfortunately, here is the catch-22. You cannot successfully obtain financing unless you have, in today's marketplace, some history of revenue. You must have some history of revenue.
Right.
You must show a consistent plan of operational excellence that is pushing you forward into the profitability sector. VC money has all but dried up in cannabis because of the capital costs involved with cannabis and the lack of performance for new operators. So essentially, if you're going to an angel investor, which is really just an accredited investor, an accredited investor or an angel investor, those pockets of financing have essentially dried up. These are the investors putting in anywhere from $25,000 to $1 million, and they're betting on a company with a very, very limited track record, but hoping for the high potential for the future upside. By and large, those investors are almost impossible to find in the cannabis space at this time. So venture capital has also dried up, which is statistically, this is followed by some of the big index reporters. However, the reality is that we're seeing very little new money for equity at the moment go into the cannabis space. So what does that mean? Very few people are looking for ownership at the moment, and there's a reason for that. In New Jersey, as an example, if I want to invest in your company, Scott, and I want to invest a certain amount of money that would put me in an ownership position of more than 5%, I automatically have to be disclosed on a form indicating my percentage of ownership with the state of New Jersey. So now I'm not a private investor. I am now an investor whose investment in your company is now publicly documented and publicly known and seen. And if I'm a very private individual and private investor, I don't necessarily want my $100,000 investment seen by the state of New Jersey, which is what we're seeing in all of these regulated marketplaces, where a certain small percentage of ownership, and every state has its own percentage markings, and some
Right.
states are much smaller than others. I now have to be disclosed. So where we're seeing a little bit more variability and a little bit more flexibility as we speak in this very tight environment is on the debt side. Having said that, debt is not easy to obtain either. How do we obtain debt in this crowded marketplace? And what should you know when seeking debt in this crowded marketplace? So right now, we're seeing essentially debt being deployed. And why is that? Why is debt the top choice for capital deployment in cannabis? Well, the equity markets, as I indicated to you, venture capital is on the sidelines right now. The federal illegality is still a very pressing issue. I cannot go out today, ladies and gentlemen, as you all should know, I cannot go out today to a federally chartered bank and apply for a cannabis loan. Now, there's occasionally an exception where there's an existing cannabis client of an institutional lender, or perhaps there's some money services being provided in some small way by the banks. Banks, ladies and gentlemen, are not lending debt to cannabis companies. Federally chartered banks are not doing that. There may be a one-off situation that you'll hear about that you don't understand, but that's a one-off situation. So where is the debt coming from? You cannot go to Valley National Bank and apply for a cannabis loan. That's not how we get cannabis loans in New Jersey. We cannot go to Chase. We cannot go to Bank of America. So Scott, where do we go? We're going to go to cannabis lenders, and that's where the predatory lending is starting to come into play full force in fashion. Even for clients of mine that are multi-state operators, but they're privately owned companies, they're not on the exchanges, even large $50 to $100 million revenue companies are being enticed by predatory lenders with lending deals that occasionally can top 50% a year or more. A lot of the lending is merchant bank lending, which is essentially high credit card debt, which is essentially borrowing money at 5% a month, 6% a month, 7% a month I have seen. So on a 4-month loan, you're paying interest at roughly 30% over 4 months. So this is higher than your credit card debt. So what I'm advising people, because I have seen where I have been trying to raise debt for substantially significant clients with significant 5-figure income, and I say 5-figure in the millions. One client I have is a multi-state operator in Michigan, Colorado, and Illinois. Top line revenue is significant. Just went into the debt markets to try to source some money and was offered monies in the small millions that would essentially be 42% on an annualized basis. Yeah. This is a multi-state client that has significant revenues, and they have significant experience, and they have significant expertise, and they're a leader in their respective environments in Michigan and Colorado. So this tells you what the nature of the lending environment is. For a proper assessment for a lending environment, you really do have to have all your ducks in a row. You have to show you have a unique product, but you also have to have the assets behind you to be collateralized. Now, having assets behind you to be collateralized by a big lender means you have assets, and that means you have substantial ability to raise money if you have those kinds of assets. Most beginning operators, Scott, do not have those assets, do not have that collateral behind them, and therefore, when it comes time for even debt capital deployment, they will be unfortunately not in a strong position to obtain financing.
So, and that's the challenge. And I'll just speak personally too.
Yes.
A lot of folks know I am an annual license holder for a dispensary. I'm closing on my money now, but I have been for the past 5-6 months working with all these different groups. So I've been working with what I would call a couple folks who are predatory oriented. I'm working with folks who, claim to be, they're going to come in with equity, and then you have a handshake agreement and everything looks great, and then you get the term sheet and it's something that's predatory-ish, right? They want to come in, they'll give you the money that you want, but at the end of the day, your shares in your company, you're going to go way down. And then if you look at the fine print, they have a pathway to take over your business, and I think that's where a lot of these folks are heading. Excuse me. Is this not just to take you, here's your money, here's your equity, but how can I control your company? How can I position your company for me to secure, in 2 to 3 years, right? Because that's what they want to do. So, some of the things that I've talked about to help position myself, help to position others, is instead of going after that big nut, whatever that nut is, whether it's $1 million or $10 million, going after that big nut may be too long of a putt to make. In other words, the deals that you might get, the terms you might get, the debt that you might get with the interest rates might be unattainable, maybe something that, unsustainable, I should say, that where you might be going out of business in 24 and 36 months. So instead of going after that big nut, maybe break it down a little bit. What do you think about how people should be positioning themselves to go after this money? Because there is money out there, and it's just about finding sophisticated sources, or friends and family, or otherwise. But how should people be positioning themselves to get the money that's available?
Well, that's a great question. Yes, in these tough macroeconomic times, we have to realize the stigma for investors, the federal illegality, and the slow dance to becoming profitable. You need to join forces with very steady, patient, and well-heeled investors that are you have to vet them and they have to vet you. So if you're gonna bring in a cannabis lender at 42% a year, you better vet them and make sure that they're not looking to take over your business and looking to run your operation in 2 to 3 years, thinking that you'll default because of the high nature of the interest rate.
Right.
So trust is incredibly important. Getting to know your lender. A lot of these new lenders in the cannabis space are very new. Are they predatory? Many of them are, unfortunately, and I don't use that term loosely as an attorney, but you are finding very few institutional lenders out there. So when you do have an opportunity to work with a lender, you must be comfortable, because you're not going to be paying cheap interest rates. So there's a comfort level that has to be part of this dance. And the lender has to be comfortable with you as well. They want to make sure they're not in the business of taking over a cannabis business. However, they are lending money at very steep rates. And unless you're a well-run company and you don't have your proverbial ducks in a row, you will unfortunately be diced and sliced by a predatory lender. It will happen. Now, we talked about this briefly, Scott. You're not entitled to federal bankruptcy protection. So unfortunately, you cannot reorganize. You don't have what's called Chapter 11 in cannabis. It doesn't exist. Chapter 11 is a great reorganizational tool in the world of bankruptcy. In fact, United Airlines went through Chapter 11 3 times, twice as Continental and once as United. And now United is a robust, stronger company because of the number of times they went through bankruptcy, Chapter 11. We don't have that opportunity in cannabis. We have to be very mindful of our costs, our expenses, and if we are at zero profitability and we're paying a very large amount to our monthly lenders, or in many cases our weekly and daily lenders, then we have to have a hard talk with those daily and weekly lenders if we have boxed ourselves in a situation where we can no longer afford to pay 40% interest rates a year.
No, that's crazy, and there's a lot of folks who just won't have that revenue for a while.
Right.
So those who are doing the debt loans, are they interest only? Is it like a balloon type of situation? Like how do you see debt being exercised here?
That's a great question. You're not seeing a lot of principal paid off on debt by and large. You're not seeing amortization on debt by and large. What you're seeing is, by and large, interest rate only loans. Some of my largest cannabis REITs are lending money on an interest only basis. A few of the cannabis REITs are doing amortization loans. Some of the largest of the cannabis REITs are doing that. But guess who their customers are who are getting amortization loans? Some, customers like Verano and TerraSend, and Columbia Crest. Some of the largest companies are getting amortization. Unfortunately, 98% of us are not in that 2% or 1% category of being in the big boy club. So the rest of us, are paying money essentially interest only. And because of the increase, again, in the macro environment, I believe the prime rate today is a very high 8.5%. I believe the prime rate is either 8.25 or 8.5 at this very moment. And you're not seeing loans to the most credit worthy, the most profitable and most committed and strong operational management teams. You're not seeing loans for less than 11.5% to the best.
Yeah.
To the best. That's to the best of the best, Scott. Right. That's to Verano on a 3-year money with some amortization. They're getting money at 11.75 or 12.5%, and they're getting this from relationship lenders that have known them for years and have worked with them for years. And these are the best of the best credit-worthy cannabis companies, and they alone are getting money at 11, 12, 13%. Now, what is the rest of us getting money at the moment? I'm not seeing fresh money for any companies anywhere going out for less than 15% right now.
Yeah, and that's what I personally experienced too. You know,
I'm not seeing it, and I'm doing this every day. Occasionally there'll be a sweetheart situation and maybe come in under 15, but for a new operation, despite the operational experience of the management team, you could have a management team that has 20 years of operational experience, but this is a new business in New Jersey. Despite all of that, the new business in New Jersey is getting money approximately at 15%. And that's if they have a very strong relationship with their lender.
So, all right. So we know that this is a huge challenge, right? And we've seen some movement at the federal level. We saw recently with Health and Human Services and the FDA and the DEA looking to reschedule cannabis from Schedule 1 to Schedule 3.
Which is very, very important. And I think that any movement on the federal government side, whether it's reclassifying cannabis to a Schedule 3 drug, any movement is remarkable because we have been so anxious for any movement by the federal government.
Right.
However, we have to be realistic and we have to be wise and we have to look past this announcement, because it really doesn't matter to the investors that I'm seeing in the marketplace and the lack of investors, that are not in the marketplace. Investors will not jump into the marketplace until the federal prohibition has been taken off the table. How long? Everyone asks, when is that going to happen? We don't know. All of us, we're all anxious to find out. We all have this desire to have the federal government lockstep and in sync with the states, but on cannabis, it hasn't happened. So
a lot of that's political too. So I saw, I read the the articles with regard to rescheduling from 1 to 3. My personal concern, while it's great, it'll be great for tax purposes, right? So those people who are operational, the 280E issue will go away, and that's a positive thing. My concern is that, where is pharma on this? How are they going to play in this world now that it's been rescheduled? That's my personal concern as it impacts the industry, and that's why organizations like the New Jersey Cannabis Business Association takes a wise look at what's going on at the federal level, because if we do reschedule it and it does give the opportunity for big pharma to get involved, what happens to the cultivators in New Jersey, the manufacturers in New Jersey, dispensary operators in New Jersey? Is this something where you're going to see Walgreens being able to prescribe cannabis pills, from some pharmaceutical manufacturer? And so organizations like ours, who are here to protect the mom and pops, we have MSOs here, we have mom and pops here. This is a good diverse industry right now, and it's only getting more diverse as it continues to grow. And the way that our state is designed is to favor the mom and pops, to favor the smaller businesses, so that smaller businesses can be engaged. So I think that when we're looking at the future, I think safe banking is your point, right? Safe banking will give more opportunities for more of these businesses to get involved, but we have to make sure that we are protecting the mom and pops, all of us who've invested our blood, sweat, and tears into building this industry. and taking those risks, that we continue to hopefully see the benefits of our labor. So I look at the Safe Banking Act as a method for that. But we're coming into 2024 presidential election year. All of Congress is up, all of the House of Representatives up, 1/3 of the Senate's up. I don't see anything major happening next year. So what do you see, I guess, with your crystal ball, Ken, as best as you can, because this is really hard industry to predict? When do you predict that it's going to be more stabilized and we start to look at these investment opportunities for people who are either in the process now or looking to get in? When do you see things getting more stabilized?
Well, it's a combination. That's a great question. It's a combination of things, Scott. Like in many industries, I think the macro challenges with the interest rate environment are certainly a factor. I think when the macro environment improves, I think things will improve. There's no question that safe banking will enhance the landscape. It'll demonstrate that cannabis businesses are now more in the mainstream, and the stigma will go away, and that'll absolutely enhance the number of prospective investors that are interested in raising money and deploying, more importantly, deploying money, because there is money on the sidelines, and how we seek to deploy that is really the shaking of the money tree. You can't be conservative in seeking money. You have to be aggressive. You have to go out there. If you have existing investors in your company that have put in $10,000, maybe they'll put in another $5,000. If you have an investor that's put in 100, maybe he'll put in another 25. What you have to do is work with the people that have gotten you to this stage. And many times, there's no question, there's liquidity fatigue in these companies.
Yeah.
You know, I get a call from my operator, Scott Rudder, who calls me up and says, Ken, I know you put in 25,000 6 months ago. I really can use another 10 right now. And I'm like, Scott, it's not a good time. I'm like, well, you know, Ken, I kind of need another 10 right now. And you have to be very insistent, whether it's 10,000, 100,000, or $1 million. If you got Ken Rose to put in $25,000, now's a really good time to say, hey, Ken, I know it hurt, but I really need you to step up to the plate and put in that extra $10,000 today. This is unfortunately the nature of the beast in the cannabis business right now. You're having to make those added phone calls to your existing network, your colleagues, your friends, your family, those angel investors that you were able to get a year and a half ago, but you've been stuck a little bit in neutral because of the delays that we all underestimated. We all thought that the CRC would take 3 months on my application. Oh, but it took 7 months on my application. So in the meantime, I'm paying rent on that licensed space that I've been holding. And where is that money going? Well, it's not generating revenue. If I'm deploying a rent expense that's not generating revenue, I need Ken Rose, who kicked in $25,000 6 months ago, to kick in another $10,000. That could be the difference between success and failure. Just that alone.
Yeah, no doubt. And I think that the main message here, and we're going to have to wrap up soon, but one of the main messages here is, yeah, it's an absolute challenge. It really is. And I think, again, when we were filling out applications in 2021 and early 2022, the world was different. The economic landscape was different. And certainly interest rates were different. Fast forward, a lot of us, myself included, were paying rent on property just to hold it, even though we're not operational and we're pre-revenue. It cost me a little over $100,000 in holding rent for this property for that long.
And Scott, there's no other business model that I know where you have to grab your property, keep it under wraps, hold it without any revenue, without any offset of revenue income, and just keep laying out funds and monies and deploy liquidity and resources just to keep it in the license name. You're not doing anything with it. All you're doing is keeping it as part of the establishment, but you haven't opened up yet. So this is the only industry where literally the pre-revenue costs can dramatically exceed quickly, and you need to get your investors on the phone that you spoke to so lovingly and so closely 18 months ago. You need to get them back on the phone and say, hey, we're on the verge of opening. Finally, we have good news. And the good news is that once Scott opens his business, the demand is constant. The demand is steady,
That's
and
the,
there is good news at the end of the rainbow.
and we really are seeing that. I went to two grand openings just 2 days ago. One was Puffin in New Brunswick, and one
Right.
was Queen City in Plainfield.
Right.
And, it is an exciting time if you can get across that finish line. So the customers are there and they're growing. They're growing exponentially, actually. And we've seen those trends both with people, trading in alcohol for cannabis for their leisure, people trading in opioids and benzos for the medical treatment, and for anxiety and DTSD. So people are making smarter choices, healthier choices, and that customer base is growing. We predict once the state is fully operational, meaning that we got a good center mass of cultivators, manufacturers, dispensary operators, the labs are up and running. All this thing is now real, which is probably late 2024, early 2025 when this really gets to a more mature market. We're going to be a $2 billion industry. We're going to probably get a little closer to $3 billion within the next few years because of our population. And we are located in a great area. I mean, we look at our neighbors over in Pennsylvania. They're struggling. They won't have anything going on until at least 2025, 2026.
What you have to, Scott, you're so spot on. What you have to show your investors is the demographics in New Jersey.
Right
The
on.
demographics in New Jersey are so compelling that I don't know a multi-state operator that doesn't want to have a piece of New Jersey because
Right.
of our beautiful demographics. We're a small state, extremely densely populated, and the demand for our product, for this new industry, for cannabis, is only growing exponentially. But you have to be realistic. You have to be very mindful of what's going on in the environment, and you have to work with people that have great experience, um, and have raised monies in different marketplaces and understand the big picture. So we're here to help people. We're here to help people be realistic. We're here to help people understand their financing needs are substantial, and they have to literally uncover every stone in the process. Old-fashioned, turn to people that you know. If you know some wealthy people, it's okay to ask them for money. It's
You can't be shy
okay.
at this point. If you have put everything in your life on the line for your dream to come true, you cannot be shy. You really have to position yourself. So look, I got to segue out of here.
Yes.
In about 15 minutes, folks. The new CRC meeting is happening.
Okay.
There's going to be a bunch of new conversions to annuals and annual license holders being awarded today. That's going to put us a little bit above 280 licenses that are out there. People who are up and running right now. As I mentioned, I went to 2 groundbreakings or ribbon cuttings earlier this week. There's going to be more coming up. This fall. I know of a lot that are going to be opening up. So it is a very exciting time. This is the place to invest. And I think as you present yourself to potential investors, whether friends or family, professional organizations, I do recommend you reaching out to Rose Law, reaching out to Ken and his portfolio and his network. I think will prove to be very valuable for our folks. So
I'll just give my email address. It's Ken at KennethRoseLaw.com. KennethRoseLaw.com. Ken at KennethRoseLaw.com.
Perfect, Ken. Thank you. So we have an event coming up on October 4th, by the way. So I want to just share this with the group here. It's called Cannabis Connection. It's our second annual event where our main focus is matching up cultivators with manufacturers, with dispensary operators. We're also going to have folks with financial backgrounds there, so people, where you'll be able to pick people's brain. I think it's a very important event for people to go to because, again, it's about making sure you have the right connections, both on who you're going to be partnering with, cultivators, manufacturers, dispensary operators, but also folks there that can help guide you for free of charge while you're there can answer some of your questions on what your pitch deck looks like, give you some pointers. All those things are going to be really important for all of our future operators. And I also want to thank our sponsors. Once again, we can't do it without our sponsors. So I want to thank Sprague Energy, the NJCBA's preferred energy provider, Financial Resources Federal Credit Union, Curaleaf, Burton Trent Public Affairs, HBK CPAs, Township Green, Saks LLP, Dutchie, Puffin, who's groundbreaking or ribbon cutting I went to earlier this week, Canna Remedies, DM Labs LLC, and Fisher and Phillips LLP. So again, Ken, thank you so much. You really provided very insightful comments, and I hope that people that are watching this get help to position themselves for success. So I want to thank everybody that's joining and all of our future YouTube watchers as well. And I will talk to you all soon. Thanks, Ken. Really appreciate your time.
All right. Thank you. See you soon. Bye-bye.
Take care.